To another episode of the Weekend Trading Edge. My apologies for missing you guys last week, but I was sick the week before, tried to muscle through, the voice never came back. So finally and rarely decided to do the smart thing, take some time off, fully recover, and you can see that I am good to go now. If you guys are brand new, my name is Akil Stokes. I am a trader and investor. I'm also a trading coach over at tier1trading.com. And this is a video I've been doing each and every weekend for about the past 6 years. Really just sharing with you my top trading ideas that are on my radar for the week ahead. Give me a second real quick. As well as sharing with you a valuable lesson about trading. I think there's one thing to do like a signal service and just share a few ideas that doesn't really progress you in your trading journey. But when we can come in and talk about the stuff that really matters, that's very helpful. Speaking of being helpful, if you can take a second to hit that like button wherever you're watching this at, that is a great way for you to support the video. I don't really ask for anything else, so that is a massive help. So as I mentioned, today we're going to talk about my top 3 trading ideas for the week ahead, but I want to start with a trading lesson. And the trading lesson is going to be really on the trading version of the rat race. So if you guys aren't familiar, the rat race is basically when you're stuck on a hamster wheel. If you saw the little graphic before this video, that is it, where you're doing a lot of work or running on the treadmill, but you're not really gaining any ground. And the term is typically used in your normal life. So like with, in your personal journey where you're working the 9 to 5 and you don't have good personal finance habits and you're doing all this work, but you don't really progress in life. And that in the trading version of it really go hand in hand. Hey, Chris, thanks for joining in. And the topic stemmed from a question I got, which is really a common question. I've been coaching for 12 years now. So yeah, I get a lot of the same questions, so I know how to handle them, including I've been through most of those things myself. But the question was, Akil, I'm having good success trading. I have these spurts where I'm trading well, I'm making profit and everything's doing good. The problem is I tend to give it back. Now, have you guys ever experienced that where it feels like you're doing well, then before you know it, you give it right back and you do all this work and you give it right back and you end up kind of right where you started? I know I was like that for a very long time in my trading career. And the question is, what can I do about it? And this is something we see in regular life too. Again, speaking of how trading and kind of personal finance go hand in hand, many people have this problem when trying to become wealthy, right? People, typically a lot of us have really poor money habits. We have a lot of credit card debt. We can never get out of it because we can't stop. We can't do 2 things, right? We're bad at debt reductions. We're horrible at impulse buy. So whenever we have debt or whenever we buy something, the quick fix, the solution is just make more money, right? Easier said than done. But even if you do make more money, if you don't really handle the core aspects of it, which is your spending habits, stopping the impulse buys, being able to reduce your debt by being consistent in your approach, all you're going to do is put yourself in the same situation. You're going to make more money, but you're also going to spend more money, and you're going to be on that hamster wheel right where you started. And in trading, we tend to see the same exact thing. So traders will win, and then they'll give some back, and they'll ponder what's the solution for this. And it's just, I just have to win more, right? So they'll win more, they'll risk more, and then they'll just give even more back because they're never handling the core issues. And they stay in this phase forever. And I don't know if you guys are familiar with Mark Douglas. Anyone familiar with Mark Douglas? He wrote 2 great books, The Disciplined Trader and Trading in His Own. In my opinion, they're kind of like, I don't want to call them trading. I guess I would call them trading Bibles in a sense. Trading psychology is by far the most important aspect that we need to understand in order to progress and be successful as traders. And I think those books are very well written. A lot of people on YouTube over here said Mark Douglas. Yeah. What he did was he categorized people or traders into 3 categories, right? Because we often hear that 90% of traders fail. So we think it's like this gap between, hey, 10% are successful, 90% are failure, where it's a little bit different. So he kind of creates 3 tiers, and I'll go ahead and draw it on the screen here, right? The top tier, which is the smallest tier, are the successful traders. And you can break these tiers up into successful, super successful, but basically you've achieved your goals of trading, right? you have gotten your trading to a point where you can do something with it, whether you're trading full time, whether it's enough supplemental income to pay for your vacations or reduce debt, whatever your thing is, you are consistently making profit off of trading. It doesn't mean you're a super trader, right? You're not making millions, or I guess there's a portion of that area that are making millions and billions, but anyone who is making consistent profit, that is, allows them to, I guess, make a change in their life, we would consider that to be in that area, right? Oh, there we go. My youngest breaking in again. Now, the bottom section is going to be your failing traders, right? These are your ones that fail right away. Give me a second, buddy. You got to close the door, dude. I'm working, all right? Your big brother was supposed to keep you out. Mom left. I told her I was going live. I got 2 kids that want to break in and be part of the show. They want to hear about this financial stuff too. Hope your kids are watching as well. But the bottom group here is going to be your failing traders. So these are the ones that just approach it with the completely wrong approach, right? Trading is gambling. I want to make money quick, right? Get rich quick. All the dumb stuff. System hop right away. These traders typically lose. These are the ones you hear about when brokers share those numbers about 90, 90, 90, right? 90% of traders lose 90% of their funds in the first 90 days, right? So these are just the bad traders. I don't think you guys watching this video, I don't think you're in that category, because typically these traders are not, you'd be signed off by now because I haven't given you a secret successful strategy. Most of you guys will probably fall in the middle here. And this section is called the boom or busters. And these are the traders that haven't quite gotten to the level where where trading has changed their life. They can make a life change out of their trading, but they know better, and they're better than the traders at the bottom who have just failed, right? These are typically the ones that they make some money, they give money back. They make some money, they give money back. And there's typically some small fixes that need to be made in order to progress from this level to this level. Now, some make those fixes and some never do. But this is the scariest level, because in this zone, what you're risking is time. Right? The ones at the bottom, right? Yeah, they've failed, but they've learned really, really quick that trading isn't what I thought it was. And then they can go on to do something else, knowing their mindset, they'll probably blow money at something else, but at least they don't spend too much time in the market because they realize it isn't what they wanted. The ones in the middle, they're wasting a lot of time, right? Depending on what you're doing, right? If you're someone that's never going to progress, if you're always looking for the Band-Aid instead of making the core fix, I'm just going to make more money, but you're never cleaning up your spending habits, you're going to stay in this level for a very, very long time. And what you're doing is wasting time. It's opportunity cost, because as you know, trading takes a lot of time if you want to be successful. And that time could be spent doing something else. So the question is, what is one of the quick fix? Lucky says right now, I've been trading for 4 years. Next year's my 5th year, and I haven't made a dime yet starting in 2018, right? So that'd be a perfect example of someone in that level. There's probably a few things you need to tweak to get from that level to the upper level. I don't want to assume anything, but you haven't found out what that is yet. Chris says as well, that's another one I can bring that actually bring the chat over, I believe, so you guys can see it. But always testing, rarely pulling the trigger, right? That's another thing as well, right? We get people in here that are just scared to go live, right? Where they're always testing, they're hunting for perfection, but they never actually pull the trigger in the marketing and kind of go for it. I've worked with traders like that as well. So there's a wide range, but the main thing is, right, we need to find the solution, right? We need to find the solution to whatever your problem is. And just when we talked about the financial aspect, where the key to getting out of that hamster wheel is 2 things, right? You want to control your spending habits and reduce debt, right? That is the key to wealth, right? It's make more than you spend and invest the rest. And invest the rest basically means have the money that you save start to make money for you. So if you are good with reducing debt, not building up your debt, right? If you can get on a plan, a solid plan to reduce debt, if you can work on your own habits and not make impulse buys. I was about to buy a smartwatch the other day for no reason, just because I saw an ad, right? And that was yes, I can buy it, no problem. It doesn't make a difference to me, but it's a habit. It's an impulse buy, right? If you can clean up those 2 things, you're going to start working your way out of debt and working your way into financial freedom. Trading, typically, I see that the problem is in one of 2 areas, right? One is going to be execution, one is going to be in psychology, or let's put it this way. I'll change this around. One is going to be in analysis. One is going to be in execution, right? I always say that consistent analysis plus consistent execution equal consistent results. It's a very simple formula to success in the markets. What I mean by consistent analysis is that you have a rules-based trading plan, right? You are trading a strategy or a technique that is testable, verifiable, and repeatable. So it's not just something where you're looking at a chart and be like, oh, I feel like this will go up today. Boom, right? It is something that needs to be rules-based. If then, if then, if then. It needs to be tested to ensure that it's actually profitable. I guarantee many of you guys watching this video are trading a strategy and you don't actually know if it's profitable. Maybe you've seen a video, maybe you've read a book, maybe someone else said it was profitable, but have you actually done the work and proved, right? Have the data, the figures that have told you it was profitable? Have you? I don't know, right? That's if you haven't, that's something you need to go back and fix. And then repeatable, something that needs to be that you can repeat in the market, right? That's one section of it. The next section is execution, right? Are you actually executing your strategy to a T, right? Are you following what your strategy is supposed to do? Are you taking the trades you're supposed to trade? Are you avoiding the ones that you're supposed to avoid? Are you not doing any of these impulse buys or impulse sells in the market where you want a revenge trade or you had a trade that you missed, fear of missing out, so you get in too early, right? It's the solution to that problem of making money and then giving off it back and ending up at break even lies in one of those two categories or in both of those categories. And I was going to say, without making this a long rant, but I've already ranted for like 20 minutes. I'll tell you what I did to change my trading results back in the day, right? And I made all the dumb mistakes years and years and before, but I came to a part in my trade. This was the final fix that I made where I did an A/B test, a split test of my actual trading results. Right, I have my actual trading results on one side. I'll draw it out here. Just delete this real quick. My actual trading results on one side, and then my trading results off of if I would have followed my plan correctly. Like meaning if I didn't do any dumb stuff, make mistakes, miss trades, skip trades, all that fun stuff. And the results shocked me, right? The results shocked me. The reason I was break even or barely profitable wasn't because my strategy was failing, wasn't because my broker was screwing me or the world was against me. It was because of me. I was sabotaging my own trading. And by doing that review, I was able to look at all the mistakes I was making. And I ended up making a goal that said, hey, I'm going to reduce my mistakes one at a time. So I'm going to do two things. Each month, I'm going to have at least one less mistake than the previous month. And then I'm going to try not to make the same mistake twice. And I worked on cleaning that up. And before you know it, I went from someone that was break even or barely profitable in that boomer buster section to the consistently profitable section. So if you're someone that's stuck in that trading rat race, if you are making profit, you feel like you're doing good things, but then you're giving it all back, investigate one of those two categories: analysis, execution, or both. And I guarantee the issue is going to be in one of those two or in both. So that's my ranty rant for the day. Let's get into some of these trades. Let's go to trade number one here. And this is going to be on the dollar Swiss. Let me go over to the dollar Swiss here on the daily. Scared a lot of people away with that rant, which is good. These are the ones that stay. You guys are the ones that I like, because you guys are here to actually hear and take in what's actually important about trading. But dollar Swiss. So we're looking at a chart right here. I know I'm on a little bit of a delay here, but if you had to, we go through that IPDE process: identify, predict, decide, execute. By the way, Jason Grayson and myself did a great Trader Coffee Break episode on that if you want to check it out after this video is over. But if you had to identify the trend here, or the situation maybe here on dollar Swiss, what would you say? Again, a little bit of a delay, so I'm going to pause, but you guys aren't going to hear the pause until after the pause happens. But I want to see you guys kind of type it in. I want to see you guys type it in. How would you categorize this? Don't worry about the little one. You guys love when the little kids break in, man. It keeps it real, right? This is a a real thing. Yeah. No trend. We are range bound, right? We are in consolidation. And something that I like to look for in consolidation, I look for it in all markets, but you see it more in consolidation, are going to be advanced pattern formations, harmonic patterns, ratio patterns. Now, it just so happens that this week we have an FOMC statement coming out on Wednesday, I believe. It's usually Wednesday. He's got to check me on that. It's either Tuesday or Wednesday, but I'm almost 9% it's Wednesday, which means I would expect more consolidative activity to occur until we get that announcement. And if we go down to our lower time frame here, we're going to start to see an advanced pattern formation forming, right? So we see the market kind of jump down. It's doing all this funky stuff. Well, this is actually a potential advanced pattern formation. I'll show you right here. If we take our Fibonacci retracement tool from this swing low up to this swing high, sorry about that. I changed from a black to a white background. So I got to go ahead and do my deal here. I don't know how long my eyes will allow me to last on this white background, but I like switching up a little bit. You guys remember the podcast on colors. So if I take my Fibonacci retracement from swing low to swing high, you're going to see that this initial move is going to be called our X to A. This move right down here is going to be our A to B. Again, give me a second just to clean this up as well. Where are you at, triangle? Oh, nope. Give me a second. There we go. Let's make this like that. Let's make this like that. All right, now we're in business. So this is going to be my swing low to swing high. This is going to be my X to A. This move is going to be my A to B. This A to B comes to my 618 Fibonacci retracement. I know that because we come to that specific retracement, I'm on alert for a Gartley pattern, right? We get our CD or our BC requirement right here, another 618 Fibonacci retracement. And if we come down to a 127, which should be right around there, see how good my predictive eyes are. This is going to be, almost there, a potential bullish Gartley pattern, meaning that if price action comes down to that level, this is a level to look for buys. The zone of that level, because everything works in zones in the market, is going to be from our D completion, which is right here, down to our X legs. We had a conversation the other day about different filters for advanced patterns. I take them aggressively personally, so I put a limit order right at the D completion. But there's other ways you can take them. You can look for a specific reason for entry. You can look for different confluences in the market. But this is the kill zone that you want to look for. And again, just anticipating that we're going to see some consolidation. We're not going to see anybody really pull the trigger on directional movement prior to that FOMC announcement on Wednesday, because everyone kind of they want to wait until they see what's happening before doing something. It wouldn't surprise me if we saw continued consolidation on this pair. And if we see continued consolidation on this pair, it's a good area to look for an advanced pattern formation, harmonic pattern, ratio pattern, whatever you want to call these. So that is trade number 3. Let's go to trade number 2, which is going to be on the Aussie New Zealand. So we're going to start back up on the daily again with the Aussie New Zealand. And I want you guys to take a look at price action. Again, there's going to be a little bit of a delay here. Yes, a rise. Yeah, the previous pattern was a bullish pattern. I want you to see if you can identify what has just happened in the market, right? IPDE, identify, predict, decide, execute. What has just happened in the market if we just start with that first step of our process? Identify. So literally look at the last candle, right? We did a few videos here on YouTube a while ago about single candlestick predictions. Look at the last candle. What do you guys see? Boris says broke to the upside, looking for long, right? So well done, Boris, right? Broke to the upside. That's the identify. Looking for long. That is your prediction. So what Boris means by broke to the upside is this. Or he means you're going to go broke if you trade it to the upside. I don't want to assume one of the two. But we look at our previous level of structure. I'm going to identify 2 levels, right? One right here. It's a horrible line. Again, I'm not used to the Got to get used to the white background, right? So we had a positive bull day right here that came into resistance and held. We had another rejection candle, right? This is actually a good bearish candle right here. We had a wick to the upside, and then we closed at the low. So this is a very strong bearish candle, right? A test of resistance and a hold. However, the next day after that, what we did was we ended up breaking and closing to the upside, right? So we had a breakout here, a higher high, higher close, as Kamani just mentioned and Chris mentioned. And I want to just take a look at this level because this is a pretty decent level of structure. I'll draw another line in here as well at these wicks right here. Get in there. Sorry about that. There we go. Sticky mouse today. Like, look at this area that we broke, right? Nice rejections to the upside here. Nice rejections to the upside here. If we look left, structure leaves clues. Nice rejections to the upside here, right? This is a pretty decent level of structure. And we broke it to the upside. So we identify a break and close to the upside. We predict that price is likely to continue higher. The next step is the where, right? If price is likely to continue higher, where do we predict price action to continue higher to? Now, the details of this are going to differ depending on the person. Everyone's going to have their own little thing that they identify. But I think we can all agree probably 106s. Nice psychological number up there, 106s. Yeah? What you guys think? As I pause for 10 seconds. The delay kills me. I'm used to live stuff and getting live feedback right away in the live room. But this delay kills me. By the way, we've been live streaming my trade of the day from the live room. So if you're around Tuesday, Wednesday, and Thursday at 7:30 a.m., check it out. We're doing it on TradingView. We're doing it on YouTube. Lots of cool stuff there. But yeah, I think we're going to go to that level. So now we can dive down to our lower time frame, our fast lane using the highway reference, right? And see how can we get involved. And what do we have here, right? We've got price action rallying up. Try it again. Rallying up. There we go. We've got our pullback. We've got our higher high, higher close. And it looks like we're starting to put in another pullback. So if you're a pullback trader, wait for a pullback back into previous structure resistance, projecting it to now act as support, and look for a potential move up to that 106 area. Real quick, I want to just see something. It looks like a 1618 Fibonacci extension as well. If we just take our swing low, this last move, to swing high and back down. Look at that. Right at that level, right at 106 even. 1618 Fibonacci extension level as well. So some good confluence there. So that is trade number 2. Last, we're going to head to my trade number 1. This is going to be familiar, right? You guys have seen this over the last few weeks, and we're still down there. This is the pound yen. So we're not going to do a full review of this because if you're a frequent follower of the video here, a frequent follower of the live room, we've looked at this plenty of times. But what we have here is a harmonic move. You've got an AB equals CD pattern down here. We've got Fibonacci confluence down there as well. We've got previous structure support. Price action has done a great job of holding this level. And what's interesting is, right, we saw a lot of pound weakness to start last week's trading. And despite that pound weakness, we were not able to break through this level. We were able to get in put in a pretty decent hold. So that's a positive sign that, hey, this level of structure so far, right? Things can change. We never know the future. We got to pay attention on a day-by-day basis, a candlestick-by-candlestick basis of the clues that the market gives us. But so far, this is a positive sign here. And a short-term positive sign here on the 4-hour are these rejection wicks, right? If we look at this candle right here that spiked lower and got rejected, and then we pushed lower, never broke this range. And then we ended with this candle last week as well. So some positive signs here on the pound yen. This one's taking its good old time, but I still think it's a trade that has a good amount of potential to the upside, and I still think it should be on your radar. So those are my top 3 trading ideas for the week. As always, what I want to do is I want to give you guys the opportunity to do a viewer's choice. So let me know if there is a pair or a market or an asset that you want to take a look at. And I'll do some live analysis for you and hopefully answer any questions that you have. Again, it's going to be a little bit different because of the slight delay. But let me know. I'll give a few seconds to see if any common things come in. I can see New Zealand dollar first. We'll let other people get a chance to type in. And if we get a few overlaps, we'll do that instead of just going with the first person. By the way, perfect chance to plug if you want more stuff. Again, make sure you follow the links that are in the description box below if you're on TradingView. Lots of free stuff over on our website. Got a question on TradingView, by the way. Do you trade crypto? I do not trade crypto personally. We'll do analysis on Bitcoin and Ethereum on not a regular basis, but at least once a week we'll tend to look at it or someone has a question about it. So I do work with a lot of traders that do trade crypto. I don't personally trade it, however. Why hasn't Akil Stokes written any books? I started on about 4 books, by the way. Now we'll get to this bonus thing, but that's a good question. I started on about 4 books, and I'll give you 2 reasons. One, the process of writing a book is grueling, right? My business partner and good friend, Jason Greystone, wrote a book, and it is still not out. And he finished writing this book about 3 years ago. And it is a grueling publication process. Now, I would do a different route. I'd probably just put it out because I don't care. But that's one reason. It was a very stressful time for him for over 4 years, which I don't need any more stress in my life. I got 2 crazy kids running around. 2, I haven't decided on a book that I would want to read, right? I don't want to write a book that is similar to all other books out there. So I don't want to write a book on technical analysis. If I did write a book, it would be more like Stephen Burns's, what's it called? New Trader, Rich Trader, Rich Trader, New Trader, something like that, where it's more of a story. So like a story of my trading journey. And in that story are lessons on the market. But I want it to be something entertaining. I think most trading books are boring. So if I wouldn't want to write something that I don't want to read. I don't think it's very hard to learn from a trading book. It's easier through courses and videos and stuff like that because you can get live application or live practical application. So I'd want it to be entertaining, more like a story. So maybe one day. Oh, or the other book I was going to write, and I didn't because I didn't want to offend anyone. I was going to write a book on the 50 dumbest trading questions I got. But there's a nice person somewhere inside of here, and I didn't want someone reading it and be like, hey, that was my question. And then I don't want people feeling bad. I know I shouldn't care. I should be a ruthless trader. But that was a book that I thought would make sense. The 50 dumbest trading questions I've heard. But maybe one day when I'm older, kids are grown up and I've got more free time. All right, we're going to go with, so there's nothing overlapping. Let's go with New Zealand dollar since that was the first one that came in. And I'll do a top down. Let me know if you have any specific questions on it on New Zealand dollar. We'll do some top down analysis here, starting on the higher time frame. And New Zealand dollar here on the daily, right? You can see there's a yellow line there. We've broken and closed below a previous level. Excuse me. Here we go. Previous level of structure support. However, we put in an immediate reversal signal, right? We had this break and close below. We had a doji candle, this little guy in here, which and an inside bar, which is a sign of indecision. Actually, may not be an inside bar. Doji candle, regardless, sign of indecision. And then we put in a higher high, higher close candle, which is a 3-bar reversal and came back up. So I'm not too big on anticipating a move to the downside. However, we do have a little bit of room. We're at inside structure. We could move a little bit to the downside. It wouldn't be enough to interest me down to 61 or 67 14, maybe call it 67 evens. But that could be an opportunity for you. You can also look for a reversal. So we'll look at both of these reasons. If you're someone that's looking to get short, here we go. If you're someone that's looking to get short, you would have looked for a pullback up here. So it's a little bit late for that. Your best bet, in my opinion, is waiting for a fresh break. I don't think there's a lot of meat on the bone here to do it, but look for a fresh break, a pullback, and a chance to continue down. I think that's the best way you can do it. The other way, if you're looking for a reversal to the upside, would be a head and shoulders. So you're looking at something like this, where this bad boy right here is the left shoulder. This is the head. You've got a slanted neckline, putting in a right shoulder right now, and then look for either, it's a horrible line, but either the violation of the slanted trend line or a violation of the horizontal trend line. I prefer the horizontal trend line, but to each his own when it comes to that. So that's what I would look for on New Zealand dollar. It's not a lot, to be honest. Even smaller head and shoulders here on the hourly. Not a lot, but there is a bearish opportunity for continuation. I think we could go down to 67s. Again, just looking left at previous structure here on the daily. We could go down to 67s. We may also get that head and shoulders reversal as well. So that is it. I appreciate you guys joining me. Do me a favor before you leave, just hit that like button. If you have any questions or comments, leave it in the comment section below. I do go through and read each and every one of them. And if you're new, make sure you subscribe. That way you don't miss the next video. Real quick, you once did trading videos with an American guy. I'm an American guy myself. Just stopped his military career 3 or 4 years. I can't remember his name. Jason Stapleton, my mentor. Yeah, he was my trading coach. He's my trading coach, Jason Stapleton. We worked together at Trade Empowered. That was until what? He left early 2017. I left late 2017, I think. After November, 2017, I left. Took Darren with me, took Jason Greystone with me, eventually got Charles with me, and we started Tier 1 trading in 2018. Yep. So there's a podcast if you want to hear the story behind it, but there's basically a change in management and I didn't like it. So I was like, I'm out. I'm out. And we decided to do our own thing. And what's cool about it is that we were able to implement some ideas. Jason was the first one was out. And then after Jason was out, then the change in management happened. And then we were out too, because it just wasn't my cup of tea. And respect is very important to me. And I didn't feel like I was respected as a person or as a family, I should say. So we did our own thing, started Tier 1 trading in 2018. Was a great decision because we've been able to do, we took a risk. We did things in a different way. And like trading, high risk, high reward. We got recognized by Forbes magazine as being the leading innovator in trading education. And now you're seeing a lot of people follow our mold, which is cool. And that's not credit to us. That's credit to our community, because what we're doing doesn't work without a community. And I count you guys as the community as well. You know, if you're a premium member, if you're a trial member, obviously you're in the inner circle community. But if you're just a supporter out there on social media, on YouTube, Twitter, Facebook, wherever we're at, you guys are part of the community as well, because the job is to really redefine what trading is, spread a message of reality, get rid of this whole scammy stuff and this get rich quick and buy my system and strategy, and actually help traders with lessons that are going to actually get them help instead of kind of just trick them into giving money. So you guys are part of that community as well. And again, we can't do what we do without you. How do I connect with you today? Anywhere on social media, email. I'm all over. I'm on Twitter. I'm on Facebook. I'm on Instagram. Akil Stokes RTM. Just watch out for scammy people, guys. If anyone ever asks you for money, it's a scam. They get really good. They replace like I's or L's with capital I's, and I even followed myself once. Believe it or not, that's how good they are. I followed myself, and I was like, wait a minute. Why am I about to give myself money? That's how bad it was. But if anyone ever reaches out to you or DMs you, it's not me. But yeah, Akil Stokes RTM on Twitter, Facebook, Instagram. I think I'm on TikTok now. Or of course you can shoot me an email or whatever. So anyway, I don't want to take too much of your Sunday. Another question. Do you offer fundamental analysis course? No, we do not. I have a rule. Well, first, fundamental analysis, it's not unimportant. It plays a role. I don't believe in trading strictly off fundamental analysis. I don't even believe there could be I think it would be very hard to make a course off of fundamental analysis because of how things change. So one, I don't make courses on stuff that I don't believe I'm an expert at. I'm not an expert in fundamental analysis. Two, I don't, it would be hard for me to make I don't think there would be much value in a course of fundamental analysis. Now, I think fundamental analysis is good to learn, right? And I've learned it over time, especially the relationships. But I don't think there's any. It would be hard to do a course on it because of how often things change. And what's funny is one of my good buddies, Anthony Chung. He's great. If you ever want some fundamental analysis insight, watch him. Amplify. I think Amplify Markets is his deal, is his company. But he'll even tell you, right? And he's a fundamental analyst. He will tell you, look, as a retail trader, don't waste your time. He'll tell you that. Don't waste your time. As far as like the main thing. Good to understand, right? You want to understand what moves the market, what events that you should avoid. But as far as making like trading decisions off the fundamental analysis, it's a complete waste of time. Now, if you're more of an investor, that's a different story. If you're a long-term investor, there's a little bit of, it shifts a little bit more to fundamental. But as a trader, it's completely pointless. The most of the fundamental stuff is a complete fraudulent act. It is an excuse to move the market, and there's no rhyme or reason for why it moves the market in the way that it does, aside from that people who want to move the market know that this is an easy excuse to move the market without being, without seeming suspicious. So very good question. Very good question. But we do talk about it. And again, this week, Wednesday, FOMC, that's one of the fundamental events, in my opinion, that you should not be involved in the market during. But anyway, I got to get out of here. Got to get to church. Until next time, guys, plan your trade your plan, hit that like button on your way out. Leave me any questions or comments if you just want to say good job in the chat below. I'll see you for the live stream on Tuesday, Wednesday, Thursday. Tier 1 members, I'll see you in the Q&A on Monday. You guys enjoy the rest of your weekend. Go Toffees.